Hey everyone, welcome back. Today we're talking about a super important concept and a really strong pattern in the market, the flag. Before we dive in, don't forget to like the video and hit subscribe. Alright, let's keep going. Today's topic is the flag pattern. If you can spot flags correctly in the market, your TP gets tagged. No questions asked. There are a few key tips and gotchas, and I'll cover those in just a moment. Here's the schematic of this powerful pattern. We can clearly see it at the end of a trend. In the previous video, we broke down the reversal setup and how the market flips. The flag is actually a part of that structure. Now, when you combine these two setups, you've basically got a killer pattern. Let me walk you through, step by step, how to identify the flag and use it in your trades, using the flag and the NDS strategy. 1. Identify the trend on higher timeframes first. Figure out the overall market trend on higher TFs, like 30-minute, 1 hour, or 4 hour. Whatever TF you're trading, say the 5-minute, bump up one level first to understand the broader trend. 2. Know where the pattern forms. The flag usually forms after a rally or a drop. You might see it pop up anywhere on the chart, but that doesn't mean you should trade it anywhere. Let's jump into the market, and I'll show you a few examples, and share the rest of the tips you need. Alright, check this out. This pattern is basically the same as our 1, 2, 3 setup, where the market reverses. But here's the twist. After that reversal, the market makes a sharp spike and blows right past our point 3. So why does this happen? Here's the key. When the market gives us that 2 to 3 formation and flips, we actually need that reversal in the flag pattern too. This move is what we call a seller move in. What happens is sellers think the market's about to dump, so they start opening shorts. Then, boom, a strong spike comes in and wipes out all their stops. That's exactly the moment where the flag pattern forms. So what do we need? Backhand index pointing right after the 1, 2, 3 setup. We need to let sellers get trapped. Then, with that spike, what we call a low volume spike or a volume spike, all the stops get taken out. That's the perfect entry point for us. Now, the final and most important tip, target setting. When you spot a flag, your first target is always just below the flag. This target is 100% reliable. No doubt about it. But here's the bonus. If the overall trend is moving in the same direction as your trade, you can ride the market further and push your target even lower. I'm really glad you guys stayed with me all the way to this point in the video. Don't forget to like and subscribe. It really helps out the channel. Alright, that's it for today. See you in the next one. Bye.